All right, so pull this up. So core, the most important thing, and today we're talking trading, right? In the beginning of the money flow on page 1, I say a fractal is a never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. They are created by repeating a simple process over and over in an ongoing feedback loop. Driven by recursion, fractals are images of dynamic systems, the pictures of chaos. The stock market is the definition of chaos. It doesn't do what people think it should do, and if it did, if you could just be smart, then everybody that was smart would be rich, and they're not. Because the market doesn't move like that. The market moves based on fear and greed. And it doesn't always interpret information. The market's made up of millions and millions and millions and millions of individuals, hedge funds, insurance companies, banks, retirees, investment funds. All these people are coming together every day at the same time in the same place. They all have different cultures and different backgrounds, different sexes, different races, and they don't interpret information the same. It's not one way. You can't read a book and go, yeah, I got it. It's not how it works on the mental side. Geometrically, they exist between our familiar dimensions. Fractal patterns are extremely familiar since nature is full of fractals. For instance, trees, rivers, coastlines, mountains, clouds, seashells, hurricanes, etc. Abstract fractals, such as, so they use patterns, right, to identify and to try to predict weather. Why? Because it does it the same basically every time. But even in that system, it's not perfect. But nature has a way of playing out because people tend to do things as a herd, right? And we're able, just throughout nature, you'll see patterns. If you go to the beach, you'll see it, the way the waves come in. Well, stock market's not much difference, man. It's a lot of people reacting to information, and they tend to act kind of the same. And you end up seeing these patterns build. And that's what this is about. And it's what the money flow is about, is when you're looking at this pattern could happen on a 1-minute chart. It could happen on a 1-hour chart or a weekly chart. The time frame, what people will, as a trader, when you come into this world, you need to understand that the smaller you try to make your time frame, the harder it is to make money. So we could come over here. Let's pull up a. So now here we're looking at a daily chart, right? Now I do almost all, 99% of my trading from a daily chart. If you go into a lower time frame, that's a fractal. So if we take this from a daily, each one of these bars is 1 day, right? And a red bar was a down day. And all that means is where price opened and closed was down. So if you see right here, see it? That little nick right there? That's where the market opened. It went down, and this is where it closed. And therefore you have a red bar or a red candle. You can use candles. There's not a lot of difference between a candle and a bar, okay? So here you see a red, a red, a red. What is that? That's 3 down days, okay? And then you see a black, that's an up day, and then a red, and then a down day, and an up. And you'll see this chaos. It's chaos. It seems like chaos, But we have to back up to try to make sense of this chaos. So if we're just looking at this one, you could say, wow, this seems really chaotic. Up and down and up and down and up and down. And it is to an extent, but we can, if we step back and we look, it's not quite as chaotic. You could go, wow, yeah, it's up and down, but it's kind of going up. This day here is lower than this day here. So by definition, it's an uptrend. It's moving up, right? So, but inside of these movements, it gets chaotic. And so the shorter the time frame of you trying to interpret and try to make sense of the chaos, the harder you're going to have at trading. And so you could drop down from, a daily, let's go to a 1 hour. And so each one of these becomes 7 bars on the next chart. You could drop down We could see the same thing. We start seeing this pattern emerge, right? Where price goes down, and then it stops, starts to go sideways, and then it goes up. And you'll start seeing that. And so my point to that is you need to understand that the entire nature of the stock market is being viewed by different players. Millions and millions and millions of people are coming together every day, and there is no one way to look at anything. There is no one, right way. It just depends. Depends on your time frame. Depends on, So my strategy is I'm trading for weeks to months at a time. I'm trying to catch big moves, not one day, okay? I don't, if a stock pops one day, good. We sell a little bit of it maybe, and then we hold it. We're trading for, a much larger time frame. You could back up and go to a weekly chart where each one of these bars is one entire week. So each bar is 1 week. And there are people who trade on a weekly chart, which means they put their trades in on Monday and they don't trade again until the following Monday. And what if, you can see, well, there's a downtrend. Here's an uptrend. Now, for me, that's too long. It's too far out. But you could. You're trading billions of dollars. You don't have to be in there looking every day. Why? I mean, there's no need to, right? So first thing you have to do is somehow you have to establish the time frame you're going to operate on, and you can't get this confused. If you're dropping from a 5-minute to a daily, you're going to be all confused, man, because they're going to look different. And so ultimately with the money flow, what out of this book here, if you have my book, The Money Flow, I'm trying, if you look on the cover, you'll see some of the indicators I'm looking at. I'm trying to catch the breakout, get some off the top, sell some off the top, and then either go short or cut my position down, or at least be aware that we're going down. There could be a reason that I want to hold the stock. Maybe I don't want to sell it, or I could get out, let it come down to then ultimately get back in. All right. So some of this stuff you're going to have to define how it is you want to trade, because ultimately when you come to the stock market, you're trading your own personal opinions. That's what everybody's doing. You're trading your personal opinions. A guy will say to me, do you think the presidential election is going to have effect on the market? Yeah, it will if you think so. Because if you think it will and you pull your money out, well, it had an effect, right? So we create our own truth. How you respond. For me, that stuff doesn't factor in. I don't factor in earnings. I don't care when a stock's earnings are. I don't really look at it. I don't care who the president is. I don't care what Congress is doing. I don't care. I watch price, and then I look at these indicators, and it tells me what to do, okay? There could be horrific things happening, and the market decides to go up. Horrible things that should be bad for the market, and the market breaks out and starts to climb higher. And so I can't use that kind of information to try to interpret where price is going to go. Price is going to go where it's going to go. Now, this pattern, you'll see, it's in the money flow. Where are we at here? This pattern becomes clearer and clearer and clearer on individual stocks, more so than on index funds. But even on index funds, the pattern will emerge. And you'll see I use these indicators, right? And they're the same every time. I have what's called the RSI, and I have it on top. This is called the TSI. You can replace this with the MACD. And this is a MACD histogram. And these two, honestly, I use them. We won't get into those. They can be complicated on how to use them. But the main thing that I'm looking at is where's price in relation to this green line? Like, that's the first thing you got to understand. This green line is 20 days of trading. And then just big picture, okay, big picture, if price is above it, then I assume it's going up. And if price is below it, I assume it's going down, right? Just big picture here, we're backing up. Now, you can run into issues, what they call whipsaws. See, the reason trading's not easy is it's chaotic. There's chaos. It's chaos. And we have to try to kind of make sense of the chaos, And you'll have these moments where it tries to rise above, and then it goes back down. And we begin to see levels. So inside of that, you'll start to see these levels where price will stop. You see it getting hung up. And so we have to bring all this together. Like, how do we interpret all of this? The price movement, the indicators, these levels, the histogram. And so that's what I'm trying to do with the money flow. And each one has its own little weighting, like a recipe. But ultimately, it's price. Like, price is the ultimate indicator. That's what they pay you for. They pay you for price. Sometimes people ask me, well, what do you think about volume? You know, I don't really care. I'm not saying volume's a bad thing or a good thing. It doesn't weigh on my decision because they don't pay me for volume. They pay me for price. Nobody, you know, when I put my money in the bank, nobody says, hey, was that a low volume trade or a high volume trade? Nobody asks that. So I don't worry about it. Now I get it. Volume will push stocks up. I get it. But stocks can climb on low volume and they can descend on low volume. So for me, volume's never really been a concern. I just haven't ever figured out how to factor it in to doing anything. So let's look. Stocks make this look easier. Okay, you see, indexes can be a little, not quite the, you know, you have to be a little loosey with the pattern when you're looking at an index, but you'll see it. There's the sideways, there's the down, right? So you see that right there? That's that. Sideways up, sideways down, sideways. You'll see it. And then it'll start to go sideways. And then what? Then we're breaking out. And you'll see the pattern play out. Sideways, break out, sideways, break, you know, and then it'll break down. And then it'll go sideways. And what you see happening here is called support, where these levels match up and they hold. And what you see up here is called resistance, where prices bang up, bang up, bang up, and they create these zones. And you'll see me talk about these zones as being boxes. And they're a lot clearer on individual stocks sometimes than they are the indexes. And price will move from box to box inside of what I call the money flow, where it'll get hung up, and then it'll drop, and then it'll get hung up, and then it'll go sideways, and then it'll rip higher, and then it'll stop. And, you know, it's not always perfect, but when it is, you can see the pattern. So see on this one. This is a trade we recently had. What did I just tell you? It runs up, and you get this almost like a horseshoe pattern of price, just a general direction of price. See it? Now, some people get the misconception that it's going to be perfect, like in my example. That's not it. It may go over, and it may only come down to, say, right here, and then it starts at stage 1 again, and then it rips higher into a stage 2. But one thing I've learned is price has memory. Where price has been before, it can go again. That's how you get support and resistance levels, okay? So for price to stop here would be perfectly normal. Why? Support and resistance. So remember over here, there's resistance, right? That became support. Look at it. That was a level that price had a hard time breaking through. It hit it, and then it finally broke through, right? Well, on the way down, look what happened. It stopped. Why? Previous resistance often becomes support. And we assume it does. Like, I just make assumptions all the time. Just like in blackjack. To play blackjack and have a winning strategy, you have to make some assumptions based on the cards that are left. So if the dealer has a 5 and you have a 9 and a 2, you should double that. That's the way the game plays. That's the winning strategy, right? Same in trading. Previous resistance, I just assume becomes support. Now, I don't assume immediately. I let it prove itself out. I'm looking for price to go sideways. Once it confirms with all my indicators, so all 6 of these indicators are going to line up and start doing the same pattern, fractal pattern. I talked about it. Just like you see at the ocean, the waves are the same, the rotation of the moon's the same. I'm looking for a similar pattern every time. And when I get that pattern, I get ready and I position myself. Do I know how far it's going to go? I have no idea. I have no idea. But what I do know is price has memory. That's how we create support and resistance. And so these previous zones of where it stopped, I simply draw a line and I assume it's going to go there again. So I make the assumption it's going to right here. A little bit down. We'll take it down a little bit. Before it gets from here to here, I have to watch this thing. What is this? This indicator tells me about price velocity. Did price go too far too fast? Now you might think, oh shit, here we go. Now it's getting complicated. No, this is the work, man. This is how you interpret price movement. None of this means it's going to stop. It may not stop. It may keep going, but often when price moves too far too fast, it tends to stop. So when you get a bunch of green up in here, you should never be buying that stock. This is greed. Think of this as a fear and greed gauge. These people are greedy. These people are fearful. Greedy, fearful. And all this gauge means is we've reached the level of fear, meaning it's probably gone too far. And then I look, okay, so I got my RSI, I draw my line, and look, it just so happens to be at a previous level. Cool, everything is lining up. And as it goes sideways and sideways, it just confirms this. What do I assume? I assume the next thing is we're going to break out and run up. Now, the only reason that thing will break out and run up for me is I go do some fundamental research. I go, what is OPK? What do they do for a living? And I go and read, and I go, what do the analysts think it's worth? If I was going to write a check for this entire company, what is it worth? And they come back and they say, man, it's worth about $5.50. Well, that's right around my target. All right, we got something here. Now, remember, we were doing that back here. So I'm buying something for $3.25. It's matching my pattern that's worth up here. Perfect storm. And so I bring all these indicators, these charts with a little bit of fundamental research, and I say, this is a good deal. This is a good deal. I don't just use the chart. Now, a lot of day traders and pattern traders are using just the chart. I don't do that. I use the chart and research. So I'm doing both. I'm doing both. Okay? Now, big thing, people will say, well, how do you know the price of a stock? And I'd say to you, how do you know the price of a car? You buy damn cars and it ain't that big a deal. Nobody panics on how to figure out the price of a car. Nobody panics and calls everybody, well, how do you figure out how to go on vacation? You get on websites that have vacation deals and you're looking around. Any other thing in life, we figure it out just fine. All of a sudden it comes to a stock and people are, I don't understand. I don't know. It's just like everything else in life. If you wanted to get a loan, you call around and see what rates are. Same thing. You can look around and there are plenty of people that all they do for a living is tell you the price and the value of stocks. They went to college to study finance, and this is what they do. They read books, and they understand, all the accounting, and they put out price targets and say, hey, this stock is worth probably this. So look at Snapchat. So this is one that I began selling, right? Why? Because the RSI hit an extreme. Why would I sell there? Because this is where the greedy people are. So this is where people who often are new, or they go to when they're like, oh, wow, this stock's up 50%, dude, I'm going to get in on this. And they start buying. Cool, because I'll sell you my shares. I want to buy them when people are fearful, and I want to unload them when they're greedy. So I want to get on the opposite of the transaction, right? So we start scaling out now. Now, I'll let it keep going. I don't want to sell all my shares because they might want to take it all the way to $6. There's a target there. So I have a target here, and then I have a target here. Why? Price has been there before. People have paid $6.25 before. Why not now? But you say, would you buy it here? No, you'd be a dumbass if you were buying this stock here. Why? Because the RSI is on 73. You were supposed to buy back here. And so this is why I follow the same 40, 50, 60 stocks. Now I'm looking for new stocks, but most of my time is spent watching the same old stocks, right? So I just added to Facebook. Why? Why would I add to Facebook? It's doing the pattern. That's a tighter pattern. Sideways breakout there. We ran up. Sideways. Now, remember what I said. You see green on the RSI. You see a 70 RSI. These are dumb people buying right here. These are dumb people. We've all been dumb people. I'm sure you've done it. If you're buying here, you're a dipshit. There's just no other word for you. You don't. Now, that doesn't mean that's the top. It's never going higher. That's not what I'm saying. I'm saying you need to wait because it'll work this off. This is going to come in and then it'll stop. It'll start to go sideways and this game will start over again and price will break out. Where's our target? $300. And you can see the pattern. You'll see it. Goes up, over, goes down, and then it stops. Wait, and then it stops and starts to go sideways, and then all the indicators start breaking out. That's the pattern. And there's our target. Now, will it hit 300? I don't know. It's hit it before. It's hit it before. And so that becomes my target, where it was before. So this is stockcharts.com, man. Most brokers will give you a free trading platform. You know, I don't know if you want to use a free one. I like stockcharts.com because it works on my phone. I like to be mobile. You see it, Apple's doing the same pattern. So you see the same pattern. Apple broke out. This is a stage 2 breakout. Price breaks out above. Actually, it happened right here. Runs up. These stocks have been trading really aggressive. These aren't the best examples. Like, I don't try to force something. Sometimes people are like, what do you think of this stock? And I just don't see the pattern, so I don't like your stock. You know, I'm not trying to make it happen. I want it to be easy, man. I want trading to be easy, you know. And if it's not easy, then, you know, why do it? So, you know, look, sideways, up. Now we're going down, and then we started going sideways, right? Remember what I said? It doesn't have to come all the way back to where it was, even though the example shows a picture like that. God bless. It doesn't have to. It could sell off and just come, say, halfway down, start to go sideways again, and then our breakout. What's our breakout? So if I'm looking at the thing, my breakout is price closing above the 20-day moving average. That's the first sign that price is breaking out, okay? It's the first sign. So that was right here. It's the first sign. We do look at a couple more things. I'm just trying to keep it simple today. But my first sign is price is breaking out. Where's my target? Where it was before, $26. Will it hit it? I go look, do some fundamental research. What do the analysts think it's worth? And they said, well, we think it's worth $28. Cool. Perfect storm. I'm buying an undervalued asset after other people sold it off with a target of where it was before. When it hits that target, I sell some, not all of it, because if people want to keep it going, I'll just let it ride. And so I have a way to enter and a way to, you know, we did that with DraftKings. So DraftKings now, I'm trading it as a core position, so I'm down to half my shares. Why? Because we're going the opposite direction. So if you remember, huge run up, went sideways, right? We can just trade along with DraftKings. Went sideways, sold off, right? So up, sideways, down, and then what? There's your breakout. We got long. And it didn't run, just sideways, 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 and then it finally did. Where was our target? First target was previous high. Boom. Sold 1/5, keeps going. Where's the next target? Extreme RSI. Sold 1/5. Where's the next target? Extreme RSI. Sold 1/5. So now what? We're down to like a half or less of the position. And now it's going down. Cool. We don't own as many shares as we owned going up. That's the money flow. Money flowed in, money flowed out. And so as you begin to follow the money flow and get in tune with it, it just becomes a natural thing to do. This is extreme, you sell a few shares. It goes a little higher, gets extreme, you sell a few shares. Why? Because the market's gone too high. Because it's like a rubber band. Once that happens, it's going to pull back. Where's it going to come back to? Probably where it was before. So I put a line. Previous resistance is going to come support. So price will probably pull back to right around this range, probably right around in here. And then what? It'll start to go sideways. So you'll have sideways, up, then it topped out. Now we're coming down, and I fully anticipate it'll probably come right around here. I don't start buying the day it does it. I got to let it confirm. It's got to start to go sideways. You know, we got to get some sideways motion like we did there. We got to get some sideways motion. So it's going to take time for this stock to work out, man. Edgar, it's called fucking Google, dude. Go type that shit into Google. How do I invest? Come on, man. You go to a fucking Google and you type it in, and it'll give you the answer. That's how life works. Yeah, this is a 14-day RSI. It's a 14-day RSI. So I'm going to look at WWR without being mean, because my first step was to be mean right there. So what's to do? Here's your breakout. See, and now on a stock like this, the pattern's not as clear, but if you back up enough, you'll see it. These, these are kind of stocks that get these low volume. Get a big sideways here. See it? It's not as clear. Starts to go. We start to drift down, right? There's your breakout right there. Stage 2 breakout, right? And look, RSI is extreme low. Right? Was it extreme low here? No. Here? No. Meaning that's not a deal. Once it gets extreme and starts to go sideways, we need to start going sideways. Histogram starts to turn up. Boom. There's our stage 2 breakout. We take a position. Where are we going to sell it? Well, ordinarily we'd sell previous high, which would be about right there. It ripped through that. Now we're on extreme RSI. We'd sell down. I would sell half this. This is just too big a move, man. Now you should be down to half. Now you should wait. This thing, it could pull all the way back into here. You should still be holding your shares if you're trading the money flow. Maybe you're trading something else. Would you add here? No. No, you'd be a total dipshit if you're buying shares right here. Complete dipshit. It's too high. The RSI is too high. Does that mean it won't keep going back up? No, it could keep going back up, but that's not how we trade. So in order to add to this would have to come down, stop, start going sideways, go into a new stage 1, and then break out again. So we've had quite a few of these. I'm trying to think of Polo was one. Polo was one. So look at the pattern here. So if you're looking at it's all about the pattern, man. You got to burn this in your brain. So if you look at a stock and I don't immediately see this, I don't give a damn about your stock. I don't care. It's a terrible stock. It's horrible. Because to me, I'm looking for this pattern because that's my strategy. But if I can clearly see it, now I'm like, oh, I'm interested now. Sideways, up, sideways, down, sideways. So you see how over here I might get a little bit interested? This thing's following the money flow. We take a position on the breakout. Where's the target? Previous high. Bam, bam, bam. What are we doing now? We're just waiting. Now we're just waiting. We sold some, so now we're waiting. Why? Shit, it could go higher. We don't know. Until it goes sideways and breaks down, it's still a buy. Man, it don't matter. There's people you have to use a limit order. No, you don't. You can just click market. It works just fine. Could something catastrophically happen the moment you click market order? It could. In my 20 years of trading, it never has. Could you have clicked market at the exact moment of the flash crash? You could have. So it just depends on market conditions. If you're trading and you're working, you should put in a limit order. So when I got long this right here, I would have went ahead and put in a limit order to sell 1/5 of my shares at $3.50, price on quote, and it's good for 60 days, your order's in. And then if you're at work and this thing rockets higher, you're going to get filled. What a lot of people do on these big stocks when they move real big and they make 100%, they sell all of it. Just complete dipshits. They sell all their position. It's because you're greedy. It's because you're not used to having a winning position. And if you're not used to winning at stocks, you want to sell it real fast. It's a common mistake. I mean, I did it too. You're up 20, 30% and you start looking for reasons to sell your stock. It's because you're a loser. When you're not used to winning 100, 200, 300%. So you develop this mentality. I'm up 20%. I need to sell some. I know, because you're used to losing. You got to lose that, man. You need to be anticipating making 50, 100% on any trade, or don't take the trade, dude. If you're trying to make 10% pops, it's because you're a loser. It's a losing mentality. I don't mean you're a loser. I mean you're trading a losing mentality because you're operating inside of scarcity. You're thinking this market only wants to give you a little bit. No, it doesn't. Market wants to give you infinite returns. There is no limit. You're limited. There is no limit. You know, go look at Tesla. Is there a fucking limit? There's no limit. It doesn't have to make any sense. And so if you're constantly taking off, I'm up 10%, I need to sell this, it's because you don't have an actual strategy. So we should anticipate unlimited returns. Now, you're obviously not going to get unlimited. You could double, take half off, and now you're operating in unlimited. It's not even your money, right? My point being is, if you get massive moves, yes, you want to sell some, you want to ring the register, but then you leave the rest on to run. Otherwise, you're operating out of fear. I might give it back. You might give it back on 2 or 3, and then one of them goes up 1,000%, and it makes up for all those losers. I've had 1,000% runs, man. 1,000% run makes up for a lot of problems. 1,000% run. So look at space. You see what I see? This is when we started trading. Now, sometimes it'll get out of whack and it's not doing the pattern, and then it'll start coming back and start doing the pattern. Sideways, up, sideways, down, sideways. See it? Space got a little goosey-loosey over here, and that's a whole nother conversation of the box, building the box and support and resistance. You know, I don't want to go too deep. We'll just get lost in the weeds here, but big break. Where's our target? I want to say it's around $43, $44. Also on the RSI. Now, some of you guys in the trade group already sold this, and I know who you are, which means you violated the system, and you're now a violator. You're on the list. You broke. You're supposed to let them run until you hit a 70 RSI or the target. That's the strategy. Was a day trader 4 years, losing, have an itch to sell right away, swing trades, consciously trying my best to fix that. You should. Yeah, day trading is really, 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 really difficult. It's difficult. Like, I could give you a winning system and it's difficult. There's people that trade with me who can't follow it. They still have to break it. It's inside of them. They have to. They have no choice. It's 68 RSI. They have to sell it because they can't follow that. They just cannot follow the system. They have to change it. They have to tweak it. There's always something. They have to. I'm telling you, people, that's the way people are, man. You're like, well, it's close. Yeah, I know it's close, but it ain't the system. The target's $43, or what was it? 23. Dude, there's people who trade with me for a year, still every day fucking break the rules. Every day. Every day. They can't help it. They have to. It's just inside them. You know, you can, and do an experiment like I used to do when I was first teaching people to trade. I would say, listen, here's the strategy. When price goes above the 20, I want you to buy it. And when the RSI hits 70, I want you to sell it. I guarantee you, if I gave you that and 30 stocks and I said, follow these 30 stocks, when it closes above it, buy it. When the RSI hits things, sell it. Put the stop below the previous support, you will fuck it up. It is the world's easiest system, and I've never had anyone successfully complete it for 30 days. At some point, they have to modify it, change it, do something. They always do. They can't help it, man. It could be that simple, dude. And that's a winning strategy. Buying on the breakout, putting the stop loss right below the low, and then letting it go. They cannot just let that happen. They always find some reason to do something else, man. It's just human nature. It's tough, dude. Discipline is tough, man. Especially when you make, you make reasons for your well, I see this breaking out over here, so I'm going to take this money and I'm going to put it over here. Okay. All right, but you just broke your own rules, man. It's tough. Space is a good one. Let's look at space on a weekly chart. Chaos, huh? Look at this. Chaos. Don't force charts that don't work. Some stocks are not trading the money. They're just not moving in the right way. They don't look right, and those, you just have to do something else, Yeah, these are getting tight, man. A lot of them are tight, man. I use E-Trade. That's the exact excuse everyone uses. I did it too for years and years and years. So if you know you are compulsively over trading, if you're closing trades early to get into new trades, that means you're compulsively over trading. You know, maybe it works for you. The problem is if you continuously do that, you end up not having a strategy at all. Like you don't have one that you follow. You're just churning. And, you know, so be careful. Be careful. Oil stocks have been breaking out. And I do it too, man. Believe me, I'm getting on them. I'm talking to myself here. I do it too. But let's look at crude Brent. So you see a simple proxy is the USO. It's not a perfect proxy for oil. We see it above the 20-day moving average, right? Over here we saw it below. Oil's trading really weird right now. See that low? I get excited when we get an extreme RSI. So right around in here, I'm kind of getting excited. We start to go sideways. There's our breakout. And now oil stocks are moving up. Where are we probably going? Previous high, right around in here. So let's go look at some oil stocks. Where's Exxon? So look, huge down move. Now we're starting to go sideways. So on Exxon, it's trying to break out, and we're in this box. It's starting to create a box, which is what we're looking for, right? At the bottom, we're looking for a box. So can we draw a box? The box just means with price. Do you see it? So to have a box, you need a couple points. There's a point, there's a point, there's a point, there's a point. See it? He's breaking out, breaking out, breaking out. See it? See it? I sent an email about it. Now we started to kind of get one here. It didn't work. Now we're getting another one. Where's our target? $42. Maybe a little higher. Yep. So now all the oil stocks are breaking out, man. So, you know, which ones do you want to trade? So I got in Gush as a trade. Gush. Stage 2 breakout. Where's my target? $35. It's 20-30% higher, right? So we'll trade just like we do anything else. So everything's turning up. So you could have added to this yesterday because it's still a, you know, a solid trade. Where's my stop? Gonna put it, I don't know, probably right around in here. This is what's called a kangaroo. I usually ignore these days. So I want to find the box. This was the box. We're now broke out of the box. I'm gonna ignore this day. Maybe use that as your stop. Target, previous high. There you go, man. Easy peasy. I'm gonna sell part. I'm gonna sell part. So I'll sell 1/5 at the target. I mean, if you're trading super large positions, you might could call this a target. That's too close for me. See, it's just too close. There's no room to get going. And then obviously on the RSI hits 70, I'm gonna sell. So I'm gonna be looking to sell here and on the RSI 70, and I'm gonna scale out. You know, I'm gonna sell 1/5. I'm gonna sell 1/5 as it climbs higher and higher. Each time when I say sell 1/5, I don't mean of the original balance. I mean of the current shares I hold. I'm gonna sell 1/5. I'll be down to whatever, and then I'll sell 1/5. Like don't make that math class. Like people sometimes get that all complicated, man. Don't turn it into a damn algebra problem. It's just the process of money flowing in, money flowing out. So we wanted to be flowing money in, and as it gets higher, we want to flow money out. Because the trade will be ending. We're swing trading. So we're not investing, right? Hold on, my shit's getting messed up. So Cisco's a new one. Flowing money in. Why? Look. Look, man. So if we're looking at the pattern, you know, where are we at? Where are we at on the pattern? If you're looking at Cisco, and this is one I track all the time, So if I'm looking at this pattern, are we in a stage 3? Are we going up? Are we going down? What are we doing? So if we go look at the chart, we're on the right-hand side of that, right? So we can draw our pattern, right? Big ass sideways. Then we went down. And then what? We started going sideways. See it? Created the box. And now we're breaking out. Where's our target? $42 if we're swing trading. Now, if we were investing, I would just be buying here. I'd buy these boxes. That's it. I would just buy the boxes as an investor, and then maybe as it breaks out, and then I'm done buying. Done buying. Just leave it be. And so as I maintain this portfolio of dividend stocks, I'm looking to buy the bottom of the box. I'm looking to buy stage 1s. I'm not buying stage 3s. Why would I buy it when it went up? I want to buy it when it goes down. But that's a different game, right? And so if you're trading versus investing, if you start mixing those two in your mind, you're going to get a little mushy. So make sure you know what you're doing. So for me, I own this in my buy and hold, but I also put it on as a swing trade. The swing trade, I'm going to get out here. The buy and hold, I'm not getting out. I'm just buying some more down here. That's it. That's all I'm doing. Now, but the swing trade, I'm going to get out up here at 42. Makes sense? And so you just got to decide what's your time frame. It's fractal. Like I said at the beginning, the game is fractal. We could look at a 1-minute chart, a weekly chart, but this is a daily chart. So we're swing trading a daily chart. Man, you can just big picture this, just back up, look. I mean, just big picture. Up, sideways, down. Now we're going sideways, see it? Right out of the thing, man. Doesn't mean they always work perfect, but I sure like to see that pattern, dude. Yeah, some of these battery stocks, look at this. This has been amazing. This is what you call a runaway. These get a little harder to trade, right? These, if you notice though, these big moves, watch. Remember what I was saying, just big picture. If price, look, breakout, breakout. That one didn't break, but it closed above. All these breakouts precede price closing above the 20-day moving average. Look, breaks out, RSI gets extreme, right? Starts going sideways. Sells off, so you're watching it. Actually, the breakout would have come right there. These get tricky on people. Let's look at this real quick. When this sold off, comes back up, starts to go sideways, you gotta think you got something here. This one's tricky. You could have got knocked out. Me, I like to give, if I'm using stops, I give it a little room. That was obviously the zone. Look, held it. So for me to have a stop anywhere other than below here would just be silly. And you can see that held up. Look, that support level held up all the way across. That's why you want to be cognizant, can't even speak today, of these levels, support and resistance levels, because they're really going to help you. You know, I use them for stop losses. Some people will do a strategy, well, I don't like to lose 10% or more on a trade. Okay, the market doesn't care about your strategy. Like, you want to use strategy that makes sense. You want to use market structure the best you can. Let's see. This has been a hell of a move, man. I would be scaling that. This is one you could scale in and out of, man. This looks like the Tesla chart. Like, I would scale out, anticipate it coming sideways. You saw over here, look, came sideways, sells off, gives you a chance to get in lower, breaks back out, runs up. And you say, why go through all of that? Well, because this is this is a month. This is a month where it went sideways. You could have taken that money and put it into shit. In the meantime, you could have had some money, more money in Zynga as it's going up. And so you're compounding your money by pushing money in, pulling money out. Not sure if you responded. My phone fucked up. For group members that work a lot, can they follow text updates while following their 10 they watch per your book? I don't know what you mean by that. If you're talking about my text, yeah, why not? I mean, I work a lot too. Not quite sure what you mean by that. Why wouldn't the stop be right below the 20? Because you will get stopped out all the time. You will get stopped out all the time. Because what's more important, because listen, when you get these boxes at the tops and the bottoms, if you notice, look real close at that picture. This is price going above the 20, below the 20, above the 20, below the 20, above the 20, and yet it's going sideways. So, using the 20 for stops, in my experience, is not a good strategy. You want to use support and resistance. You want to use, levels. So, like even over here, what I'm looking for as fast as I can, like if Zynga was the one we got in, it's not a perfect chart, but if I back up, you'll see the pattern. Again, not perfect. It kind of, whenever you see, you'll hear me talk about the most bullish thing you can have, where price is making a box, drops out, comes right back in. It's the most bullish there is, as far as for me. That just confirmed this box as being the bottom for me. That's all that did. So now I know, okay, this box is the bottom. Price dropping below the 20, when my target is $10, I got to give it room. You don't want to run your stops too tight. That means your positions are too big. Take a smaller position and give your thing more room. I'm not day trading. So I don't care if a stock moves $1, $2, $3 one way or direction. These trades take weeks and months. So we're not day trading. We're not putting all the money into one trade and we got a 50-cent stop. We're not doing that. We're using structure. So as long as price is above the stage 1, we're still in a stage 1 or stage 2. Like we're going the direction. It has to break this before market structure has changed. And so I'm trading market structure, which I'm trading the pattern. And it can you'll see it. It'll run up, sometimes pull back a little bit. Like it'll go up and then kind of pull back under the 20, and then it'll kind of start to go, and then it'll start to kind of pull back. Well, I'm using this as my stop. As long as this box isn't violated. Now, if we crash through it, yeah, we're done. You got to get stopped out. But as long as we are doing, it may take a minute to get it going. Look at DraftKings did this exact thing, man. Over here is the stage 2 breakout, right? So, well, I've been drawing my box. We traded this one exactly like I just said. We had been drawing a box. This day right here, it fell out of the box and came back in. That is the most bullish sign in trading. And I talked about that. It came back into the box. There's our breakout day. Now we're in. Well, look, it fell all the way to here. But that held the box. So we didn't get stopped out. But that's a little bit of a room. So you got to give it some room. As long as that holds, the market structure holds. And look, price has memory. Bounced right off and just kept going. So you got to have some belief in these support levels. And then, same thing. Why is my target? Well, same thing. I had belief in these levels, so that was my target. Boom. My target going back up will be what? $62, where it was before. Where are we going to come down to? Probably right around 40, 42, 45. That's where it stopped before. Market structure. It can take a minute to get comfortable reading market structure, and there can be a little nuance in some of that, okay? It's not black and white at times. You may draw a support line a little different than I do it. Because technically, watch, if we're looking at DraftKings right now, we could draw, you only need 2 points. Right here. We have a support. Look, right there and right there. There's our top. So technically, we're in a box. If this holds, and then it holds, and then it holds, now we're what? We're going into a stage 1. So over time, this is going to start to develop. And when that goes to rip higher, above this 20, this is going to take a minute. This is probably going to turn down, and you'll see this just start developing, and it'll start looking like it did over here. It's just going to take a minute. And then in a couple weeks, we may have a new trade. It may break out sooner than that, but chances are it's going to take a minute. So I'll just keep watching it every day, keep watching it, and let this develop. I'm down to half a position. I don't anticipate this holds, but it could. And that gets nuance. This is a stage 4 decline. Look, price closes below the 20, coming off an extreme high off our side, and it's headed down. So we're in a stage 4 decline. You'd be perfectly justified selling all your shares right there. you're going down. I only sold half. Yeah, so technically support, it's kind of a gray area. They're not exact prices. So, I like to, you could put a stop here, right around in here, and if that doesn't hold, then you're back out. It's a great, these are kind of gray areas when you start getting into support and resistance levels. Some are pretty obvious. This was a previous high. So I think price could come back to that pretty easy. Yeah, I'm not a big fan of tight stops. I just watch people get stopped in and out too much. It's trading scared. Like you're not trusting support. You're getting out. And the worst stops of all is like, well, I don't like to risk more than 10%. Well, okay. I don't know what that means. You could do 10% of your account, so you got to adjust the number of shares you're buying so that you don't lose more than, I get that. But just arbitrarily buying a stock and putting a stop loss 10% back doesn't even make sense. Yeah, so I'm trying not to get too involved. I'm trying to keep it simple. If somebody's new, we go into this more in the book and as you go forward. On Sundays, I try to keep it simple. When it hits a stage 3 on this break here, what we call the stage 4 decline, it's the opposite of a breakout. It's a breakdown. And like my man just said there, it needs to break the box of stage 3. And that, I know that can get a little complicated, man, but DraftKings went straight down too. And then how tight do you want to draw your box? Right around in there. We're down to half position. If this broke, nothing wrong with closing it out, man. Call that your box, and it stopped. Let's say we break that. Nothing wrong with closing out that trade. I'm going to hold it. I'm down to a core. I'm cool holding it on the way down. Yeah, man, there ain't none of that. No, just arbitrary percents don't make any sense. There's no sense. You need to use market structure. Now you could adjust your share account where you're not losing more than 10%, right? So let's say you want to put in $3,000 and you're like, well, I don't want to lose more than $300. Well, then you got to look, okay, well, the stop needs to be here. So you'd have to adjust your share account so that when it hits the stop, you only lose $300, Man, nobody wants to look at banks, man. Banks are going straight up, though. Let's look at the IAT. But look where they stopped. Look where they've been stopping. Previous high. See that? Breaks out. There's your breakout day. Hits the previous high and stops. You're going to see that a long, long, long time. That's, next target would be like 40 if we get through that. And that would have been a valid target just because how low we were. I keep a core position in a lot of stocks, man, and I'll write it down. I'm really comfortable doing that. I've been trading a long time. I trade the same stock. Like, I'm not overly worried if Facebook takes a dive. If you're operating on very limited trading money, the problem you're going to have is you're not going to have any money to buy lower, right? So the way that I try to solve that problem is I try to scale out. So like in DraftKings, I started off with 300 shares. I'm now down to like 125 shares, So, and hopefully if you're trading 10, 20, 30 things, some will be winners. This is why we scale off on 70 RSI or profit targets are hit. We scale money off. Why? So that we have money to put into new trades, right? So, yeah, banks are doing fine, man. DVAX. Yeah, but 20% DVAX is like 2 days. So you see what I'm seeing on DVAX? This one's got me interested. And we're in this one. This has been a loser. But you see the pattern, right? This big sell-off. Tried to rally here, didn't work. Tell you what I'm looking at on DVAX box. It's built a new box, right? but it came back into the box. Super bullish ordinarily, and this time it seemed to turn down. It's been very disappointing. I mean, it's not perfect. No strategy is. Yeah, I don't pay any attention to volume. So DVAC should have broke, man. I don't know why it's not. You know, if I didn't have a position in this, I would definitely get one. This is like a stage 1. You could put a stop loss right here. So you see how I would do that? My stop would be right there, because that's the low, man. If that breaks, we got to assume you're going down to the next level, you know. So if we back this up to a weekly, yeah, next level is like $3, dude. Fuck. I don't know why this stock can't get going. I don't know, man. Sometimes you just get them and sometimes you just drop it, man. You just like, fuck it, I'm done with this stock. I've done that. I dropped out INGN, and of course now it's probably starting to work. Look, I finally gave up on this stock, man. This thing had traded the money flow strategy perfect, and then it just kept going into this continuous downtrend. So I gave up on it, man. Yeah, so the DPSTs one, I like trading leverage funds. Be careful when you're trading them. UTSL is one of my favorites. This is the utilities. I talk about this in my newsletter. We've made a chunk of money on this one. You know, I like trading these because this is a very safe ETF. This is the electric companies. So it's the XLU. Now, if you're using these triple leverage funds, you have to use the unleveraged fund to make your trading decisions, because the charts get wacky on the leveraged funds because of the leverage to the downside and the leverage to the upside. Here's an example. Breaks the box, back in the box right here, super bullish, runs higher. Super bullish. This is one we were in. Delta gives a good example of this. Let me show you what I talk about. Breaking the box, back in the box. If you remember back in May, Delta just shit the bed. Back when Trump and everybody was tweeting everything, and it broke support. It had tried to break out, came back, and then it just fell. When that came back into that box, that is crazy bullish. And then you see what happens. There's your breakout. That's your last chance to play. And then you just rip higher. RSI, you never buy. You'd be a seller here. And then you could get out over here if you're getting out. And this is a stage 4 decline. So we didn't talk about it, but these moving averages, you see the green line, right? When they configure 10 or 5, 10, 20, that means everything is going up. So the sub ones, the 5, the 10, the 20, when they're all on this side, things are going up. When they're all on this side, things are going down. So you can make some basic assumptions, right? So let's see. Yeah, so that one we made some money on. That's one, the UTSL is one that you can hold a position into a sell-off because of what the nature of its stocks that make it up. It's not that big a deal. You got to make that call. I'll hold some, I don't hold some based on fundamentals. If I really think a company's worth more. Like I held Uber through a lot of selling, okay? And all I was doing was building my position. Whenever it would get crushed, and it hasn't done it in a minute, but the chart now has just gotten ugly on Uber from a trading perspective. But I really thought it was going much higher. And look, we have a big problem with Uber. Look at this previous high here. It's rejected it every time. Here, here, and here. Is it going to get through it? I don't know, man. Yeah, and then, like he's saying, stimulus should help the airlines. It should. Should help the airlines. INO's done great, man. We don't need to look at that shit. So spend some time, if you're new to chart reading, spend some time with these moving averages. And a lot of people think, well, when you're crossing over, you're getting a signal. You are, but what you're getting is chaos. You have this conflict now between buyers and sellers. That's why moving averages cross. When there's smooth sailing, the big trades come. Look, the big trades come when they line up. So price cost goes above the green, and then the 5-day, the 10-day, and then the 20. They're all numerically aligned. The moment they start going sideways, what do you have? You have conflict again. And when price starts to go sideways, it's either going to go up or go down. That's it. And you can see if price breaks above the 20 and all the moving averages numerically align on the upside, I just assume it's going up and we just ride it on up, right? And when you get a bunch of green, I need to start selling some because it's gone too far too fast. And this doesn't look far, but dude, that's like 2 weeks of trading. So you bought this week, and then at the end of next week, you're selling some off. Why? Because it's probably going to pull back. It's exactly what it does, you know. And that's a week of pullback, you know. So if you scale some of this off, you can then put it into something else breaking out. And so you can have this money flowing in and flowing out. And if you get on the right side and you catch 7, 8, 9, 10, 15 winners in a row, your compounding effect can be astronomical. You know, you could double the stock market, you know. I talk about I'm trying to make 50% a year. So this thing rips up. I'm taking money off of this. What am I looking to do with it? Looking to put it in something else, you know. Just don't force trades. Don't make trades that aren't there, you know. VYNE. We're in that one. So if you're looking at this stock, what do you see? It's bullish. Look, 5-day, 10-day, 20, they're all pointing up, right? Everything's pointing up, up, up. You know, where are we likely going? Previous high. So, you know, we're long this one. No, I'm in DVAX, man. I'm in DVAX, MGA. We're underwater, but yeah, look at this, dude. So watch this. This chart is, the pattern's not as pretty as I'd like to see, but if you're trading this every day, look, where was the high? Stream RSI. Do not ever buy stocks when you see this, okay? I know there are exceptions. Tesla kept going even though you had that. And that's the reason I would tell, like, don't do it because it's a bad example. You will lose. Don't buy stocks when you're on an extreme, okay? Look right here. Do not buy stocks when you're on an extreme. Every institutional trader I know guys that work at hedge funds, they do not buy stocks when it's on an extreme, okay? They wait for it to pull back. It is a bad. You're a bad person if you're doing that, okay? Just think that, bad. Let it pull back. You want to buy stocks when it's on the extreme. Now, runaway is a different conversation, okay? Runaways happen. Like Tesla was a runaway, and there's a different way to play that. But look, as this pulled back, when this got extreme, look what happened. See the box? See it? Look, histogram started turning. Look. Boom. Broke out of the box. That's a buy signal. Crazy buy signal. There's your breakout day. Buy signal. Where's the target? Previous high. Bam. Hit it. Right on picture perfect. Swing trade over. Extreme low, extreme high. Completed swing trade. So I would be down to whatever, you know, maybe half, whatever, probably a fifth. I mean, I'd probably be down to a fifth about now. You get a little, you can be a little flexible with that. Maybe through your fundamental research, you think, man, this stock is really worth $75. So you just scale a little bit. Why would you scale a little bit? Because you need some money for the next trade. You can't just leave them all tied up in one trade. I mean, you can't. I mean, in theory, I guess if it kept going, you'd be fine. But that's not how they work. Look over here. Extreme RSI, went sideways. Extreme RSI, went sideways. Now you're on extreme RSI. What fractal pattern will possibly could happen here? Just like predicting the weather. They don't know for 100%, but they know every time the clouds get like this and they start spinning and the temperature drops and the atmosphere, like they can take that. That's a pattern. That's a trading pattern, a fractal pattern. And they can look and go, okay, yeah, you're probably about to get hit. Well, guess what? You're probably about to get hit. And so you would scale back. Perfect one, man. Appreciate you sharing that. How beautiful is that? I mean, it was perfect. Breakout, runs up, tags the target on the extreme RSI. I mean, that's picture perfect trading, dude. That was MGA. So that's what we're looking for. Even over here, though, this has been a killer stock. So if you can catch these where you just stay in the money flow on these, look at this one. So on that high, pulls back. What are you waiting for? Sideways. You got your box right around in here. Now, how did I know I would have got in there? I mean, I'm trying to keep it simple today, but there's a way of, there's your stage 2 breakout. Where's your target? Previous high. Pow, tagged it. I like that stock, man. And sometimes they break the cycle, like my man said. You can get out of whack. You can get a stock and you're just like, hey, fuck this stock. This thing ain't working anymore. So here's another one. Big move up. Who would have been buying this here is, I have no idea. I don't know. This is, do not do this. Look, these are bad human beings. Terrible people. You don't want to be these people. And then look, it pulls back. Back, 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 back. And we finally get our sideways. Now this pattern's not as clear, but look, sideways, up, a little bit of sideways, and then we come down. We got long right here. And now it's pulling back. Still above the 20. Everything's still working. Here's some targets. Fingers crossed on this one. Fingers crossed on this one. As long as we hold the, I mean, this one's going to be tough, dude. How tight you want to play this? Because a big part of me really, this thing is a mover. I mean, you can make a case for right there, right? There's your stop. The little box that had formed right here. Or maybe you go down one more. I would sell half right here, the other half here. We don't want to get bitch slapped. This thing, if it goes down, it could go all the way down to $1 to 90 cents, you know? Yeah, those are bad people. Just think of that in your mind. I don't want to be a bad person. Is that a dividend pair? Yeah, I don't know that stock, man. It looks nice, though. I mean, GoPro was one people kept bringing up. This came up on the live so many times, man. I should have bought it. Like a dipshit, I didn't. Remember I was saying, yeah, that's a perfect box, dude. Buy it. I'm over here telling people to buy it, and I don't even buy it. Look. See your box. Stage 4 decline. What are you looking for? RSI goes extreme first. Now we're looking for some sideways action. It's confirmed maybe right around in one of these days. 1, 2, 3. You got 4 days sideways. Histogram turns. What does that tell you? That tells you momentum to the downside is slowing down. When this starts to tick up after a big down move, it's the opposite, right? We got divergence. That just means that the momentum to the downside is slowed. What confirms that? We went sideways. This is the exact pattern, right? Of OPK, Zynga, exact pattern, Snapchat. And then look, there's your breakout day. Price goes above the green. That's right there. Price is breaking out. What's going to follow? 5-day, 10-day cross, everything. Look, you have plenty of time in here. And now we ripped higher. Where's the target? Previous high. Boom. Now what do you do? Well, you should have sold some there. I'd sell a little more. Now what we do? We're waiting. Completed swing trade. Low to high. Low to high. Perfect. This is a perfect trade, man. And I was looking at it literally every time I'd come on, somebody'd ask me about it. It's the same guy. So hopefully you played that right, bro. You should be down to like a half position now. You hit your target and the extreme RSI. You should be down to like a half position. You can do up. Do you put... No, bro. No, I'm not looking to short this. You crazy? This is an uptrend. Nope. Don't short bull markets, man. That's crazy talk. Yeah, my man Pablo says up 50% in GoPro at a half position now. Trading like a pro. Yeah, don't try to short something like this. That's fucking cutting your own penis off, man. Don't do that. It's because everything is bullish. We have no reason to believe it's going to come down other than it has moved too far too fast. If this becomes a runaway, this is just going to go sideways and then it's going to rip higher. And my man Pablo, if this comes back down, if this RSI comes down to 50, let's say he's waiting and this RSI comes back down, price starts to go sideways, guess what? You got a brand new stage one. It could rip higher. And that's what you got with Tesla and a few others like these runaways. Same thing, man. It rips higher, right? Gets on the extreme RSI. And what does it do? Goes sideways. Then what's it do? Breaks out again, runs up, goes sideways. Same thing. It just keeps doing it, stair stepping it. You don't want to short that. A lot of people go broke trying to short runaway stocks. Even if I don't like them, I can't deny the chart, you know? Look at Square, man. I should have added to Square and I didn't, dude. Fuck. This thing just keeps, this thing is defied logic. It's $187 a share. It's crazy. I had a big ass position in this too, and I scaled it back. Oh man, I'm still in it, but okay. JCOM is one we've talked about in the past. Dude, look how sideways this has been. Look how long this has been. If you remember when we first talked about it, it was on the pop. Look, this traded perfect, dude. Look, stage 4 decline. It goes extreme. We're waiting for sideways action. Sideways action. We finally get it. Sideways action. MACD crosses. Histogram's going. So you have all of this. The stars have aligned. The moon, the sun, right? And there's your box, right? There's your breakout. That's your stage 2 buy. Buy it. Bam. Where's your target? Previous high. Come down a little bit. Maybe right around in there. Now you may say, why not up here? Because there was a box here. See the box? Ever so slightly. These are the nuance things. If you had it up here, okay. Either way, you hit the RSI, right? So this would have been a sell point, and now we're just going sideways. Look at this. Where's the next target? Previous high, right here. So this was a stage 4, stage 1, stage 2 breakout, and now because we've gone sideways so long, it's back to a stage 1. So this game has started over. All he has to do is if we break out. Now this gets tricky. You notice how we're going sideways? Above the 20, below the 20, above the 20, below the 20, above the 20. Once these things go sideways, completely, the indicators are of no use to you anymore. The only thing that matters in this stock now is the box. And look how clear the box is. So if you break out above 70, your target is 81. If you break down below, your target is down here. So whenever these things go completely sideways, it doesn't matter. Price can be above it, below it, above it, below it. The moving averages are sideways. That's a beautiful chart to get into, man. Nice. Well, my man asked about gaps. Yeah, I kind of assume they're going to fill. That's a whole nother conversation. Gaps get filled as a general rule. Don't trade on this. Don't well, that gap's got to get filled. I'm going to short this stock. Don't do that. It may not fill this gap until the year 2033, okay? At some point, these gaps on a chart, you see that gap? Gaps get filled. That gap will get filled. That could be this thing comes down to about here, touches it, and then it takes on back off. At some point, this will get filled. And so, yeah, if support broke right here, this is exactly how I would look at this. If this breaks, I just assume it's going to fill this gap. I just make the assumption. And the same to the upside. So I really love, look at Intel. What does that gap tell me? It tells me we got a lot of upside, man. Just from a technical perspective. See that? From a technical perspective, we need to fill that. To fill that, what do we need to do? Come to right about here. Where does that happen to be? Near the 200? That's a no fucking brainer right there, dude. This is like walking up, punching a baby and taking his candy. That's an easy trade. A large cap dividend stock that pays a dividend trading below the 200 with a gap right there. It's a no-brainer, man. That gap will get filled. I don't talk about this because I get sometimes when I bring this up. Again, we're getting into some nuanced areas where we can keep expanding it, adding more and more and more, and you can get but when you're new, what I find is that gets people stumbling. They get all whacked out. But this is another example of not using the 20 for your stop losses, this is a clear example why. Because look, it breaks it a little bit. But guess what? It held the box. Look, it held that support zone. So there's no need to get weirded out just because it doesn't. I mean, look, it's going higher. It's just playing with this 20. Yeah, man, this is beautiful. I don't want to get too off into that, man. We're gonna get too crazy. That's like advanced shit. Intel, Cisco. There's a bunch of these right now. Why am I excited about Cisco? Because Cisco got smashed. And look at this gap. It's way up here. It's way up here. This gives me a target of right around here. And we went sideways. Now we're breaking out. You know, does it get to it? I don't know. But it sure could. I think eventually it will. So, because it don't matter what stock it is, homie, because I'm trying to teach you how to trade all stocks, not this stock, okay? If you want to know my stock, just go to my newsletter and look. That's the ones we're talking about. I'm only showing you ones that I trade, man, unless people mention one. But you don't need to, they're all the same, man. Look at this big ass gap on FE. That gap will be filled. This is a huge electrical company that got caught up into a scandal. They were bribing senators. And we're going to close that gap. You know, it's slowly creeping. This is a good one. This one I put in my buy and hold. This was a $44 stock before all this shit happened. And, you know, it's going to, I'm not using it to trading pattern. I am buying on extremes. It's kind of gotten away from me. I was hoping to get 300 or 400 shares. This will go back to $42. It's the largest electrical company in the state of Ohio. They're not closing it down, but they have some legal problems. They got to settle. Once this gap gets filled, will it keep going? I think so. I think it's going to $44, man. We'll see. Again, I'm not trading this. I have it in my buy and hold. I'm giving it a lot of room. I think it's a double. Not from here. It was a double from over here, but got blasted. Look at that sideways though. Now for me, this isn't my buy and hold. So in my buy and hold, I don't want to say I don't ever do it, but I rarely take shares off. I did just take some off on Duke. Look at Duke. Duke exploded up. Not too long ago, I was buying Duke down here at $78. Remember, I like to buy my investments on extreme lows. When it goes into a box near the low, I like to buy down here, okay? It's now run way up here, so I'm up a lot. So I sold 10, 15 shares just to push that money into another buy and hold, which is on the opposite end. It's sold off big time. See what I'm saying? So I shaved a little bit from up here to roll into this stock down here. Don't get crazy with your buy and hold account. Build that skill set before you get to doing what I just said there. And make sure that you have fundamentals and you understand the companies and what you're doing makes sense inside your portfolio, because you don't want to be in there where you're trading your buy and hold. But there's nothing wrong with taking your trading strategy once you've seen it work and saying, okay, I get how this works. I could sell a little bit when it's on a high and I'm up a lot and roll it to stocks that I buy and hold that are on. Just practice it on your trading first. They do get filled a lot. And here's a big ass gap on that one. So another dog of the Dow. I like the dogs of the Dow I talk about in my book. This one has been just a shit show. Walgreens. I mean, look, this is a weekly chart. This thing has gone from $70 to $36. At some point, I think some activist investor is going to get involved in this stock, dude. This has really been a shit show. I own a little bit. I did not add to it on this breakout. I just don't trust the breakouts anymore. Tried to break out, went down. Tried to break out, went down. I just don't trust the breakouts anymore, man. Greens is just a shit show. Greens is just a shit show. It is a dog of the Dow. In theory, over time, those work out. I have not been adding to it. I added to Cisco instead. I mean, I don't know, man. I've read on the stock. They have had some mismanagement, but it's not as bad as it's being treated, you know? I also own some, not CVS, CVS. And, you know, I added over here in my buy and hold. It's breaking out. You could swing trade this. This is a perfect setup, dude. If you look, I mean, this is a perfect swing. Sideways, down, sideways. Now we're breaking out, and there's the target, $65. What type of return do you aim for on your buy and hold? Infinite return, meaning I don't sell it. Ideally, when I buy it, I buy and hold it, I plan to die with it. So it's kind of hard to calculate that return. You know, almost 99%, 95% of my buy and holds pay dividends. So what I'm trying to do is just buy shares when they're cheap. Just buy shares when they're cheap and just compound those dividends. You saw the other day I got $400 in dividends from MO. Well, MO went straight down, started buying a little more here in the box. I only want to buy when it's on extreme low and in the box. Now, as a swing trader, you could do a swing trade for 43. This is a dividend stock you can swing trade. But that's not that big a move, you know? We can get a much bigger move out of like OPK, right? As traders, that's going to give you a bigger move than MO. But I do like to trade MO. I trade it sometimes. I'm not in it for a trade right now. Yeah, hence the term buy and hold. I always use that smart-ass comment to people. They're like, should we sell this? And I'm like, you must not understand the concept of buy and hold. Like, you hold it. The only buy and hold that I have closed out, it's probably not true. One of the only ones I can think of in the last 5 years that I said, fuck this stock, was GE. I cut it because I felt like the company was lying. And I sold it at like $23. This was a while ago. Now, we got to go back. This was years ago, wasn't it? I sold it over in here. Yeah, it was back in 2018, wasn't it? I want to say I sold it around $22, $23, and you know, I got lucky on my sell. It had been up in the 30s, and I had been building this thing for a while, and I just felt like they were lying. A thing came out, the CEO would ride in one private jet, and the rest of the staff would ride in the other. He didn't like to be bothered, and I'm like, oh my God. All right. So Ford is one that I'm considering cutting from my buy and hold, but to be honest, it's been going up. So I haven't cut it yet. There is no dividend. Delta's in my buy and hold, no dividend. And so I'm considering cutting those, and I just haven't because they are trading, you know, I mean, they're moving up. So they are on the chopping block at some point. If I get a better company that goes on sale, I may cut those, transfer that money to a dividend stock. I haven't yet though. Those are a couple that are on the, and that hurts your portfolio, man. They stop paying dividends. See, that's a bizarre question, bro. How long would it take to double your initial investment if you buy and hold? Depends on what you bought and hold, right? Thanks, Mel. I know I've been babbling. If you went all in on Tesla, you could double it in 3 months. Right? It just depends on, you know, that's not a way to think of, I mean, in theory, I see you, man, with the workhorse. Workhorse is good, bro. Workhorse is good. In theory, your portfolio should double every 7 years. Workhorse, you got a brand new breakout, man. That's a brand new breakout. This is one of those stocks, dude, that it can go fucking $50. I mean, look over here. That was your breakout. Price closing above the 20. Ran up to ridiculous prices. We're doing it again. Put a stop right there. Let this thing run. There's a new breakout. That's a new breakout. I think you're in that, aren't you, Mel? Aren't you in work? I'm not in it. Yep. I like this one. Write this one down. Go research this one. NNOX. This is a breakout that you can still get into. So look, there was the breakout day. And a lot of times it'll kind of pause. There's the 5, the 10, the 20. They're all numerically aligned. You can still get in at the initial breakout. Where's the target? $52. This is picture perfect, dude. This is picture perfect. NNOX. This is a new one too, right? This is an IPO. So let's draw. So you can stay with something like this forever now. There's your box. There's your sideways. Your very first 20-day moving average. It's been here before. And we're moving up. I don't know anything about the company, man, so go research it. But I do like when these don't buy IPOs, wait until the money flow starts to flow, meaning the moving averages kick in. We don't need them all. We just need the 5, 10, 20. Once I have the 5, 10, 20, the histogram starts. Like, see how it's just now starting on this stock? You could trade this forever from here on out and be in the flow. Imagine if you did that with Netflix, like you started back in the day and you were buying all these breakouts and scaling back and then buying the break. It got a little wacky over here, though. Yeah, you should check that one out, Mel. NNOX. RT, what was that? What was that one? RKT. Rocket Mortgage. Rocket Mortgage is on a bona fide breakout, and this is buyable right now. I know my man, the legend Ashton's been buying this. A few other guys. If you remember, I ripped a guy for bringing it on over here. I haven't seen him back, so I think he got mad at me. If I ever get onto you, I'm just playing, man. Don't be a little bitch. And we sold off, right? Why was I getting onto him? Because there's no 20-day moving average, man. There's no 20-day moving average over here. I can't trade it. I need the 20. The 20 is how I know. And look, I was right. Now we're pulled back. And look, we're above the 20. Now it's in the money flow. Now it's a fair game. We can trade this stock. My target would be probably right over in here. I like it, to be honest. It's breaking out. We're above the 20. We got a box. Put a stop loss right around in here. That's not that far. Was that $3? Adjusted accordingly. You're going to risk 3 to make 5. That's basic trading, right? I like it, man. I like it. If I pick on you, it means I like you. You know that, right? That's how it worked in the Army, man. If nobody picked on you because they didn't like you. It's kind of like with your brothers and stuff, man. If they don't mess with you, it's because they don't like you. This is RKT. I like that setup, and I like that last one we were looking at. I got to do some research on the NNOX. Isabel says Apple is a strong company, also IPO years ago. For sure, for sure. I'm long Apple right now as a swing trade with the target of 130. Now, this is kind of a boring swing trade. If you don't have a lot of money, don't swing trade Apple, okay? Like, there's a lot better things you could do. Zynga, Snap, we've been in Snapchat. These kind of stocks you're going to get a lot more movement out of than you will Apple. But if you got bigger money, trading Apple is a fine, it's just not going to move 30%. I mean, it shouldn't. It can. It's just not going to move like some of these other stocks. Like that RTK could move 10, 20% a day. NNOX could move 10, 20% a day. Apple probably is not going to move 20% in a single day, right? Yep, I've picked on her. She takes it. Exactly. You just got to handle it. That's all. My man said Army strong. There's Diane. Diane was asking me about oil stocks, and we'll end with that. Oil stock sector looks to be breaking out. I am currently long Exxon, Chevron, Conoco. I have all 3 of these in my buy and hold. I added to, as a swing trade, I put on FANG as a swing trade. FANG with a $40 target. See my box here? That was a breakout. It pulled back. I am long FANG and I am long Gush as swing trades. and I plan to make some money and get out. I won't hold a core position and gush. I will get out. When it hits the target, I'll sell half, and then the moment it turns on me like this, once it goes below, I'll get out, okay? I don't want to be sitting on a double, what is it? Gush is a double ETF because oil has not been very strong. So how high do we go? I don't know. I don't think we're going up here or anything. I've had people me, do you think we'll go back to 67? No, I don't. I don't think we'll do that at all. I think if we get back up in here, we'll be lucky, we'll make some money, and we'll get out of it. Yeah, man, appreciate it, Max. Max Fit LLC. Got some physical trainers. How long are you? I don't know, man. I don't know. That's the thing. When we talk about these stages, I don't like to pretend like I know. I don't know. So when we go into a stage 2, I just assume it's going to keep doing it until we hit a stage 3. And then I just assume we're going to stay in a stage 3 until it either breaks out into a new, a 3 becomes a 1. If it goes sideways long enough, it becomes a 1. Remember we were talking about that with JCOM. So JCOM. Look, that was a 3. Broke out, ran up stage 2, now it becomes a 3. But because it's been going for so long, it's now a stage 1 again. And that can happen. So just keep that in mind. And we don't know. I have no idea. I just use targets that are logical, and I watch the RSI. And what's in motion tends, Newton's law of gravity, right? What's in motion tends to stay in motion till it's hit with a force. And I kind of consider the RSI a force, targets are force, support and resistance are forces, and these things just bounce in between forces, All right, you guys be good. I didn't answer any questions for YouTube, so I'm going to see what those guys said and then get out of here. You guys be good. What's up, YouTube? Hold on, let me post that to Instagram. Did we look at Ruger the other day? RGG. Yeah, that's a nice breakout right there. Yep, I'm hoping you're long that. RGR. I mean, that's a classic. Down, sideways, breaking out, target. If you're swing trading it, maybe 75. And this is one, if you're an investor, this is where you start buying. Once it starts moving, just leave it be, man. So, that's the pattern, dude. Sideways, down, sideways. Now we're headed back up, right? So, that's the pattern. That's what we're looking for. What did he say? Lake. Yeah, your breakout day was here. Your target, 26. This one's not as clean. It's, but because you had such a big move over here, this is a huge consolidation. I like it. That was your day. The day to get back in this, or what I would have called the breakout, would have been that day right there. That would have been the breakout. Now, you always hear me talk about sell at previous high. While stock will get stuck here, I would not sell that previous high. It's too close. And notice what's happening. It's getting stuck there. It's just not, it's too close for me. So I'd be more about right up in here, because it should get through this, but it makes total sense. Whoa, hold on. Let's take this down. Let me take that down. Remove from profile grid. Hold on, guys. But you see how that is just too close a target. So 26 would be my target. Let me put this on. Posting that shit to Instagram. I'll leave them up for a minute and then I take them down by the end of the night. I was afraid Instagram was going to crack down on stock stuff. There's so much bullshit out there. Remove from profile grid. That's on IGTV if anybody need to see. Yeah, I like it, man. I like that this over. What else we got here? We got rid of those weirdos from Instagram. So LCA is one that I'm in. We had a big move up, big pullback, just like I like to see. Now we're going sideways again. So this has played out perfect, dude. Watch this. And this is one of those stocks where it came out of nowhere and then it just lit up and then they become a thing. Look, nothing, nothing. Look how far back this was. Nothing, 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 nothing. Freaking explodes. When that explodes is when it gets on my radar. I'm not buying that, right? I don't buy this. But what I do buy is the pullback. So I wait on the pullback, and then what am I waiting for? The next breakout or the next sideways? Now, I didn't catch this sideways, but I did catch the breakout. This was one in the newsletter and whatnot we traded. Target was previous high. We hit it, scaled it back. Stocks kept going. I got all but down to like 50 shares right around in here. Now we're sideways again. So, I mean, honestly, you could start adding to this again. Target would be $18. I haven't. I've been waiting, but I need to. I need to add to this one. So this would be a good spot to start adding to LCA, man, with an $18 target on some of those shares. I like it. Good one. BXRX, man. This has been a serial disappointment. I like the fundamentals of the company. I think this is a real business. They make a real product. Yeah, it's a stage one, dude. I haven't added. But look at that support level. This is stage one. Instagram. Yeah, you're reading that right. This is stage one. For sure. Stage one. I've got a pretty large position, so I haven't been adding. Yeah, Mel's losing the bet for sure. HLX. Let's check that out. HLX. Okay. So this is an energy stock. I'm taking it. HLX. Energy Solutions Group. You know, the only problem you're going to run into, and I would take this though, this is stage two breakout. You're probably going to run into a problem right around in here. And why do I say that? Is that was a level here and here. When you get these ones where a level's been hit a bunch of times, it tends to get hung up on it. But if you get through that, I mean, you're way up in here, dude. I like it, dude. I like it. Right. So my man figured, like he says, listen, Polo and LCA covered BXRX and more for sure. And sometimes people are, well, why didn't you close that out? I like the fundamentals of the business. Like I think this stock, and you see how BXR, you see these giant moves. When this thing breaks, it could go up, 20% in a single day, and it'll be too late to get into it. So, I don't want to ride it to 50 cents, but let's see. I mean, it's hard for me to even consider selling down here where this has been the previous low and analysts have an $8, $9, $10 target on it. Maybe I end up being wrong. Hopefully a bunch of winners make up for the losers, and that's why we trade more than one stock. You could have easily justified selling, though, when we broke support here. Right there, you could have sold and been justified. And then, but look, you're right back to putting it on if you're trading the same stock. So I don't know. I'm in it. I'm feeling the pain like everybody else. I mean, OSTK, dude, that's when I'm kicking my own ass. I got out of that thing at a nice profit, and it just continued to go and go. Breaking my own damn rule. I broke my own damn rule because I thought it was just ridiculously overpriced. Uh-oh, Mel's here. She figured out our secret club. This is a breakout, dude. And the target is 120. She figured out. A lot of times I'll stay later on YouTube because the people on Instagram are kind of weird. Yeah, that's a breakout, bro. I like it. I like it. It's hard because it seems so crazy what the stock is trading at, the valuation, because I still am a fundamental guy, even though I use charts. And sometimes that can hurt me because, I compare everything to real estate. And, it's like trying to flip a condo in an area that is overpriced, goes against everything. But it is what it is. It's breaking out, right? He said Mel's weekly winner. He's probably still researching. Let's look at Gann. Probably still researching. I like this. Gann. That's a nice little breakout, man. Nice little breakout. Yep. I like this. It's giving you time to get in. Everything's moving up. I'm going to use the bot. I'd probably put my stop right around in here, but I like that, man. That's not a bad one. Mel says, stop it. Yeah, man, ET, big move out of the MLPs. And look, gave you a chance to get in. Big breakout. There's the thing. But how high do these go? Who knows? I bought a little bit in my retirement, but to be fair, I was buying some over here too. So, and then the breakout, remember we broke out and it just came right back down. So I wouldn't trade those, but I do own those, What we got? RVLV. There we go. RV. My pen would work. RVLV. I've never heard of this. Look at that, though. Perfect setup. Look at that. This level held, and look, it had held, we're being kind of loose over here, but this zone was definitely a support zone before, and now it is here. So, for me, that's your stop, right? Right around in there, which is also the 200. A lot of things coming into alignment here. Easy target. Even if this came back down, I would give this level a little room. I like it. It's interesting. They're an apparel stock, huh? Ben wanted to join the pain. What is BXRX? He's getting in at a better price though, Mel. BPT. Then I probably should go. I'm starving. BPT. Gotta do a little work. Woo! Oh my goodness. This is a royalty trust. God, that is an ugly downtrend, dude. I see what you're looking at. Whew. I go read on the fundamentals on this damn thing, though. For it to go back to the target is almost a double. Go see if you have. This is a relentless downtrend. I'd go read on the fundamentals on that thing, man. That's not pretty. I see what you're looking at, but we'll look at this last one. Oh, IPOC. Ooh. So this is a new IPO of some sort. Social Capital. What is it? Hesofa. What is that? Hedosophia Holdings. I see the pattern. You see it. Sideways, up, sideways, down. And we stopped right in that level. It's a little early yet to buy this. You got to give this a couple more days, man. That level needs to hold. But I like how it started to break it. You see it? Started to break it. It started to break it and it came right back and closed like literally on the dot. So someone thinks this thing is definitely worth $10. Is it worth 12? Do a little research on this one. And it's a new IPO. It's merging with Clover Health. Oh, is this a SPAC? Is that what this is? So we don't know what they're investing in. I was trying to remember the symbol of another one. Yeah, man. So you're giving this dude money and let him trade it how he feels he wants to trade it. Those are kind of neat. They're kind of interesting. You know, it seems like something maybe you put in a buy and hold, but I guess you could trade around it. No reason you can't. Seems like something you put in a buy and hold, though, right? I mean, we're right back to where it opened, so. And then SPAQ is one. Is that one of these two? These are like a new thing. People are. Oh, these guys are doing energy, though. Yeah, these are kind of new, right? A lot of movement in these, yeah. But it's kind of like you're writing a blank check to the manager. Here's $100 million. Go make us money. Interesting. Is that what NNOX is too? A lot of movement in these. Interesting. All right. Donut time. You guys be good, man. Appreciate it.